So the Good Stuff podcast is what it's called. Trying to focus on the community and real estate and trying to help people through that. So the Good Stuff podcast, bringing you local good stuff. But
absolutely,
yes. So welcome back to another year, guys. Feels like a long time since we did these before, and it has been a while. So I wanted to kick off the year with kind of 2023 and housing and what that looks like. So this nice gentleman here I've met recently, quality lender. So I wanted to introduce you to Aric French.
Thank you. It's great to be here. Great to be on the show. And, I love the branding, and I love that you're in the community in Marysville. It's one of those communities where it's super niche, right? Like, I think Marysville is probably like one of the most closed off parts of Columbus. I don't know if you agree with that or not, but it feels like I can't really be a part of Marysville unless I physically live here. You know what I mean?
There's a lot of people that say that. Oh, I've been here for 10 years and I still feel like an outsider. I mean, I've been here since I was 6, so it's all I can really remember. But yeah, it's a very special place to me. I've always said it's the best of both worlds. It's getting to be a little less so. Small town, close to big town and all that. But yeah, it is a kind of a set apart thing. But like my wife's former employer always says, we're closer than you think. Because it's really only 12 minutes to, I think it's 12 minutes to 270. But anyway,
right.
So today we're going to talk about housing and just kind of what you can expect, and, obviously interest rates and the mortgage side, and because obviously most of us are in need of some financial help when it comes to buying a house, and just where the numbers at from a real estate market standpoint. So
yeah.
Here we go.
Thanks again for having me. Again, my name's Aric French. I'm with Guild Mortgage. I've been doing mortgages in Central Ohio for about 10 years. Last year, and actually for the last 3 years in a row now, I've been in the top 1% of all loan originators in America, which is awesome. And I'm really glad that we crossed paths when we did. I'm really excited to help give back to Marysville.
Speaking of that, I wanted to make sure we talk about Homebot and offer that. Anybody who wants to sign up for that, it's a great way to stay connected and great service to.
Yeah, drop your Homebot link in this for sure, because Homebot, we put out the Homebot tool for buyers recently as well for all of our pre-approved buyers, because it gives you so much more relevant and accurate data than something like a Zillow or a Realtor.com would. Have you seen that? It's given the dollar per square foot broken down by zip code and even neighborhood now.
I haven't gotten that far, no.
It's sweet. It's really, really, really good information if you're a buyer. More information than you can get anywhere online, and it's free. So,
and I love the numbers, but I'm not patient enough to really go through them. And so this being able to be on the sidebar to say, here are the numbers as you're browsing for houses and looking at things, to me is a huge thing. So you don't have to have a spreadsheet and go through everything. It's just kind of there, and it auto calculates everything for you.
Right, absolutely. And I think like the key there is too is like with tools like that, like it's not trying to sell you the house. Like at the end of the day, when you go to Realtor.com or Zillow or even some of the real estate agents' websites, like their goal is to sell you a house. This is a tool that you can analyze a good deal and analyze what you're buying a little bit more efficiently and effectively than, again, some of the other things that are out there.
Yep, and it boils it down to good buy or a fair buy, I think is the other one, and bad.
Right.
So it kind of gives you 3 levels, which makes it pretty nice.
Yeah, and for home sellers too, right? Like you can get a free valuation of what your home's worth, and it lets you reach out to Derek and get a little bit more details about what those comparable sales may be pulling and where those are coming from. So I think those are super valuable information. We send that out to all of our past clients, and I think that's one of the reasons that we started working together, because we were both on Homebot, right?
Yep, connected on there. So you'll see his face on mine, and
vice versa.
Yeah. So just wanted to pull up some current numbers for the housing in Marysville School District specifically, just kind of get niched down in there. Got any guess, since you're not a local?
No idea. I mean, I know that Marysville, the growth rate of Marysville is, I think, greater than most places in Central Ohio.
Yep,
Like all of Central Ohio is insane, but Marysville is one of those communities where,
more concentrated.
I almost relate it back to like, and this, I'm probably going to get shamed from Marysville people for saying this, but I almost think of like Powell in like the 90s.
Yep.
Like in the 90s.
Usually we get compared to Dublin, so
Dublin,
Powell is
yeah,
different.
Well, yeah, Dublin
that's
in the 90s
great.
too. Yeah, it's like it was so much farmland, and then just becoming developed like one neighborhood at a time, and it's all kind of connecting. So I love the community. I love it.
Yep. So my coach kind of gives me a hard time because I just focus on Marysville numbers, and obviously the whole MLS. I think it just said there's 27. I'll go back to it. Active listings. We have 25 active listings. We've got 33 in contract. And usually there's about 26 that have closed in the last month. So we've only got a month of inventory. So inventory is pretty low, and that is kind of everywhere.
Let's focus on that for a second, because I think this is one big misconception that I hear a lot about. Last year, rates went to 7.5% in the summer. They went back up to 7.5% in the fall. Now they're starting to fall and starting to head down, which was what was projected. We have a lot of buyers coming back onto the buyer market and kind of jumping back in, but we're seeing a little bit less competition. Mm-hmm. But fundamentally, you're not in a low inventory, or excuse me, you're not in a high inventory or shifting towards a buyer's market unless there's 6 months of inventory.
Over 6 months.
So if you look at Marysville as a snapshot, as a microcosm of Central Ohio, we're talking about 1 month of inventory, and that's higher than it's been for the last 2 years, I'm assuming.
Yeah, it's on the high side. Average is probably 0.7.
Yeah.
Half to 0.7 has been the most common that I've seen.
Yeah. So I think that's getting back to like 2019, 2018 numbers, maybe.
Seems like yesterday, but
right.
Yeah, definitely. It's and that's the odd thing. There's aspects of the market that have slowed down, but you're not seeing, and that's always the simple metric. 6 months of inventory is a balanced market. So above that, buyer's market. Historically, we're starting to feel like it's more of a buyer's market, like there's less competition, but that inventory really hasn't crept up that much. It's just barely any, and so it's really odd how that has those two things are.
Yeah. I mean, on the one hand, buyers are finding a little bit better deals now, but on the other hand,
unfortunately, have a listing that's had some price reductions.
Yeah,
that's
and
common.
I think last I looked, and I just looked at general MLS, so not specific to Marysville, but it was like a third of all homes had a price reduction that were listed. And it was about 1.3 months of inventory. It was available at the end of, I think, November is when last I looked. Mm-hmm. So, again, you're seeing a higher level of inventory, more physical listings, less people going into contract. But you can't really draw a clear line to extrapolate that very far in the future. And the reason I say that is because the reason that inventory is up a little bit is because rates went up a lot. Mm-hmm. And now rates are down a little bit from their highs. Again, the peak was 7.5%, and we've got a clear path of interest rates from 7.5% down to, I think today was, according to like Mortgage News Daily, about 6.14% was the average 30-year fixed rate. So if that's the average 30-year fixed rate today, and we've got a 1.5 rate reduction, we should start to see some buyers come back to the market pretty soon. And also, fundamentally, the reason that rates went up was because inflation got out of control. Inflation has a clear path down now as well. We're seeing lower prices of gasoline. Mm-hmm. There's still some pockets like food costs where fertilizers and manufacturers are getting hit really hard still from Ukraine and Russia and China, things like outside of our control. But we're going to get the CPI data tomorrow for the month of December, and December 2021 CPI was already 7%. So if you're comparing it year over year and it's already 7%, you're probably seeing a flat line inflation. And then the Fed can turn around and say, well, we flattened inflation.
Mm-hmm.
Now it's just going to gradually go down as we hold interest rates high. So we could have seen the peak of interest rates. And I think that, again, going back to what I was saying before, what's projected right now is that rates stay sort of in this range for another 3, maybe 6 months at the longest. But every 12-month and 24-month projection shows rates going to 5% and then to 4.5%. So the strategy as a buyer in this market is date the rate, marry the house. You've probably said that on the show before, but
Yep.
you know, and many people have coined that phrase, I'm sure, but like that strategy is so true because buyers don't understand, you know, there's very limited costs in a refinance with a good lender, right? If you shop it at all, you should be able to get a low cost refinance that doesn't cost you anything out of pocket, uses your future equity, and you're going to be able to get a much more affordable payment in the next few years. Not to say that you can't get a low payment now, because we can do things like temporary buy downs and seller paid closing costs. We can talk about that a little bit, but you know, going forward, it's such a unique opportunity that you have now as a buyer for these next 3 to 6 months to get a great deal when you know that rates are going to go down, which is going to force prices in Central Ohio especially back up in 12 to 24 months. So it's like if you're buying something today that's on sale, 6 months later, 12 months later, it's going to be worth more money. You know, you're getting a good deal today. So I just see so many buyers waiting and a lot of fear in the market. But I think now we've got the data to back up that clear path forward.
Yeah. I've got a listing right now that we've got a buyer that's in and out, and they're going to move forward, they're not, and I don't know exactly. He's got a complicated situation, it sounds like, but interest rates obviously are playing into that. I don't know about you, but most of us usually push up against our threshold of whatever the thing is, and we kind of stretch and whatnot. And finances usually go with that. So, when you're there, especially, let's say this person started searching for a home a year ago or 2 years ago, and rates have only climbed and their buying power has gotten lower and lower. But it's interesting how much you, as an agent, I can feel that hesitancy from what feels like an interest rate standpoint. So being able to take advantage of those times and know, like, I've got one person I can think of, a client who searched for maybe 4 years. And this was before things went out of control. Wow. I have multiple clients, but one in particular I'm thinking of that it was pretty extreme how when you maybe if you looked at it on paper, when they started looking at houses and they thought, wow, man, this is just too much. At the end of that 4-year search, and they didn't actually purchase a house, what prices were then, it was just incredible how much different the pricing and interest rates even dropped lower. And, so the buying power was more. But to get back to your point is what I'm trying to get to is housing is rarely a bad investment. I got a headline article from an AR that said why today is not like 2008, so other than a few recessions, housing doesn't really get affected. So taking advantage of the situation now isn't a bad thing. And the other thing to keep in mind, if you need to buy.
Yeah.
If you just want to, and I think there was a lot of want to and why nots in the last 2 years, I wouldn't say we're in that market. We're in a, just buy a house or upgrade or do whatever just because. But the biggest thing I think is if you need to, or it's that time in your life, you've got more kids or fewer kids or whatever. Definitely.
Right, and that's the catch-22 is everybody needs to lock in. Through buying a house, you're able to lock in your shelter cost for the rest of your life.
Right.
Truly. Over the past 2 years, I just remember so many stories, people calling me to sell their house and buy a new one, and it was like, well, why are you doing this? And that question, I was weird for even asking that question. They were like, what do you mean? Like, rates are in the twos. Like, I have $100,000 of extra equity today that I didn't have yesterday. So I didn't have to, ask that question about why, but now it really comes down to your why. Like, if you want to, if you need to buy a house, we need to get you financially prepared to buy a house. And there will be some additional steps that need to be taken to get you into the best spot financially going forward today than were in place a year ago. But I think that those steps are for the better. And to go back to what you were saying earlier, like about real estate being a good investment, I think one of the keys to take into consideration when you're buying a house, if you're buying a house for the long run, and let's define long run for our millennial brains, is the long run means at least 5 years.
Right.
If you're buying a house to live in for at least 5 years, you really can't point to a 5-year span in American home history that you wouldn't be up on that investment at the end of the 5-year period. It would only be if you pointed to like 06, right? And then you would have 2011 that would be a lower price. But if you wait till 2013, you have a higher price. So there's very few points that you can point to. And really, again, 2008 was the only recession where home values fundamentally declined, and that was because of foreclosures, right? Like people undermine that
Housing is
factor.
part of the problem versus other recessions.
Exactly. And we're seeing that perfectly play out right now. I see so many. I actually just to tell you a quick story. One of my buddies was just texting me today about how he's waiting to buy because he wants to wait till the quote unquote foreclosure, market comes back this year. And he's watching all these YouTube videos about how foreclosures are going to spike and there's going to be another 2008. I don't know what will happen specifically, but he was specifically citing, how mortgage notes would become payable and all this kind of like deep conspiratorial.
Are we conspiracy theory
yeah,
here?
it's almost like fear porn, right? It's like there are fear clickbaity titles that will get you to click on them on YouTube, and you can go down that rabbit hole pretty easily.
That's why I've had to say no, thank you, and get rid of those because it started showing me some of those too. And like, no, I'm not.
Yeah, and in reality, how many mortgages were done in the past 2 years that weren't a conventional loan? Right? If you're buying a house in the last 2 years, conventional loans are really all that were going into contract because that's the most competitive loan type. Conventional loans with Fannie Mae and Freddie Mac are government insured loans that actually have verbiage that say that they can never become, they can never pull that note or have that note all of a sudden balloon or become due unless you are foreclosing on it and through a foreclosure process. And you can include that in a bankruptcy as well, right? So you can technically walk away without having paid anything. Yes, the bank gets to keep the house in that case, which is a great deal for the bank because they have a lot of equity in the house, right? But, and then you look at it, equity is at an all-time high. So if I have a lot of equity
have you heard numbers on that?
What's that?
Have you heard numbers on?
I've heard that, it's been said to probably both of us that I think it's like 80% of Americans hold most of their net worth at retirement in the value of their home. So this is a really big deal. But what I've heard is that equity was at an all-time high about 3 months ago because prices have declined a little bit. Maybe it's not the all-time high. But the average loan to value in America is still around 50%. So think about that. The average American that has a mortgage, I think it's 1 in 4 homes are paid free and clear. So about 25% of all homes are just paid free and clear.
I think it's more than that, but
yeah, it could be more than that too. We should Google this just to fact check it. But and then the equity percentage, I believe the average equity right now is about 50%. So my whole point in this though is you can't really fundamentally have a foreclosure if you can just sell the home and walk away and you actually get a check back, right? There's probably not really fundamentally a lot of foreclosures happening, record low foreclosures happening actually, because number one, people have equity, and number two, they qualified for that payment when they got the loan based on income, fully documented income and assets when they got the loan. And the payment is a fixed payment that's not changing. There's no adjustable rate balloons like 2008.
And things get more expensive, so usually that's the cheapest it's going to be.
Right, exactly.
Yeah, so this one says from the Zebra, whatever that is. First thing on Google anyway. 37% of U.S. households no longer have a home mortgage to pay.
37% of all households.
Last I heard it was about 40%. Now, I don't know if that takes into account institutional investors that own single family. It says households.
Right.
So I assume that's families.
Right.
But when I heard that 40% number, I think it was, again, like you said, values going up and down, which is kind of what happened in '08, that leveraged against what things were worth and what they were worth dropped. But the hard number, I think it was $173,000 in equity was the average. So of the 63% that have a mortgage, according to this, the average held equity was $173,000.
Wow.
Yeah.
That is a lot of equity.
Like, that's average.
Insane.
Yeah, I know.
So even if values do go down, if
There's
the
a lot
average
of room.
equity, there's so much room.
A lot of room. And so
you can't do a foreclosure if you have fundamentally any equity, right? Any equity at all, right? So
to me, that those when you get the fear mongers of the sky's gonna fall. Yeah, if 40% of almost 40% of households don't have a mortgage, and the average equity is in the $170,000, $100,000, let's call it.
Yeah,
that's a lot of room to kind of cushion against foreclosures and whatnot. So anyway, getting back to your buddy, I don't think there's much.
Right. And I mean, just to close that loop too, like in 2008, if I was behind on my mortgage and I call my mortgage servicer, it's like, I'm going to have to submit documentation. They have this process that's going to take months and months and months, and I may not still get approved and may have to go forward with a foreclosure. I'm probably in a mortgage that is ballooning my payments or has an adjustable rate that's based on economic data and major economic indices that crashed in 2008. The market last year, I look at the S&P 500 every day. S&P 500 last year closed down 20%, and the foreclosure rate last year was one of the lowest foreclosure rates in American history. So the market went down. Mm-hmm. I mean, you can't say it crashed, but at one point in the year kind of did. Like, it went down quite a bit. And we still have record low foreclosures. We have forbearance, we have modifications, we have all these programs. There's not going to be a big foreclosure boom, and prices are very secure. Now, the market, when rates go up, it is natural for prices to decline, right? That's just the ebbs and the flows of the market. But we're not talking about rates going to 10% anymore. They went to 7.5%, now they're 6%. Are they going to head to 5% sooner rather than later? I don't know. Could there be some bumps along the road? I don't know. But the clear path is there. And then when you take all of that, and this is one of the other things that I really wanted to spend some time on today, when you take all of that at a macro level, and you realize, okay, it's probably a pretty good time to buy because I can just refinance later. I'm going to qualify for the payments. They might be a little higher than what I want, but I can get them lowered down later. I could use seller-paid closing costs for temporary buy-downs and things like that. When you take all of that at a macro level, and then you apply it to Central Ohio, and even specifically zoom into Marysville for a second, there has been so many jobs added in the past 2 years, 3 years to Central Ohio, and those are future jobs that are going into effect this year, next year, the year after. So much infrastructure. You have Intel, Honda, you have, the Samsung, Sony, like all these data centers.
Yeah, it's incredible how much is going to be.
I read something recently through Columbus Business Journal, and it was talking about how there was like 55 to 60,000 jobs that were added in the last 24 months that pay an average salary of 6 figures in Central Ohio. I was
how many?
55,000 is what they're estimating that would be created and in the pipeline from now through 2025.
In the next 24.
Yeah.
I heard last 24.
Well, they said that like the last 24 months was the creation of a lot of these jobs, and then these
come to fruition.
Because like Intel, the plant isn't even operational till 2025, and that's probably like a best guess estimate. Mm-hmm. I don't know for sure. I have no idea. I'm not affiliated with them in any way, but I'm just looking at progress on construction, and I'm looking at what their plans are. Their plan is to produce chips by 2025, and that's when 10,000 employees just at that one plant, roughly. 7,000 something.
7, I think.
And
7,
then
somewhere in there.
What Intel fundamentally does is they produce semiconductors and microprocessors. So the companies that use those in their computers, in their TVs, in their smartphones are going to set up manufacturing plants around there.
And I mean, that's so much bigger. I think, than Honda. And when Honda came in, that was, I think there's 60.
Honda's huge.
Yeah, I think there's 60 suppliers, kind of affiliates.
Right.
I don't know what all the
and then you have Honda as expansion too, right? Like,
well, that too.
That's a little outside of town, right? I don't know where exactly that's located. I know it's on the west side.
Anna, I think it's out west past Honda.
But they're putting in a factory that's going to produce all of their batteries for their EV vehicles, which is the vehicle that they're planning to make in the future.
I feel like I heard that it was $1 billion investment, which I think these days B just replaced the M in million. Like
right.
I keep getting impressed.
Right.
Like the Scott's, I believe it's a warehouse Scott's is doing just over here, and I think that's 100,000 square foot.
Yeah.
Which I don't know warehouse speak, but that's 2 acres of concrete and roof, and that's a lot.
Massive.
So, yeah, lots going on. Lots, obviously.
So when you take those macro trends, though, and you combine that with the Central Ohio jobs that were added, and then you factor in the fact that we already have this inventory issue that we're talking about. Inventory.
Buy a house now.
Right. People forget this, but do you remember before the C word, the pandemic, before all the craziness, we were still doing appraisal gaps. Yeah. We were still doing multiple offers.
It was already, crazy. It was already crazy.
I was talking to a friend the other day who bought a house with us in Delaware in 2017. 5 offers. They were like, yeah, we only had to pay $10,000 over list. And this is 2017. This is with similar inventory that we're seeing available today.
Yep. Yeah, and that's what's crazy, and how I can never tell because when was it? There was one year I remember I think it was the beginning of COVID maybe when they said it's usually the spring market kicks in when it gets warm, it seems like, and it just kicked off before that, and so every year I feel like, okay, is what's going on in the market in January? Is it cold weather's keeping people out? Is it slowing down, or is it going to kick back off?
Yeah, that's a great question.
Yeah, because it seems to ebb and flow. But yeah, the similar inventory now than then, and yeah, all of the different things of crazy that it used to be. Ooh, only 10,000 over.
Yeah, I think it's like every year. Nobody wants to shop for a home like after Thanksgiving, before the new year.
Yep.
Nobody really does home shopping during that period of time. So our closings in January go down. And then January is hit or miss because it's like either a foot of snow or like this year so far, knock on wood, I'm probably jinxing it, but it hasn't been so bad so far. So I think that, just year to date, we've seen a huge influx of people that we had prior pre-approvals issued that were wanting to wait till after the first of the year to get back into the market. We have a lot of people getting back into the market to buy a home, and really they're getting prepared for the spring buyer market, which I do think
that's a huge thing.
The MBA forecast, the Mortgage Bankers Association in America, they just forecast like units and volume for home purchases in America. What they're saying is basically like this is like probably the slowest it's going to get this year. And they're showing a gradual decline in interest rate and a gradual increase in the number of units and the volume that's done. And that's really going to pick up in like March, April to the tune of about 25%. So if 25% more purchase transactions were done in March or April, now I think, and rates are potentially in the 5s at that point. I think in our market, when you combine all these factors, I think we're going to be back to a multiple offer appraisal gap type situation.
I'm afraid we are.
Yeah. I think this summer is like, we have such a booming economy and we haven't really gotten to experience it because we were in this like macro booming economy with COVID and this macro sort of stagflation, inflation time. But so we haven't really seen like as if rates get to normal, and I'm saying normal in air quotes in the 5s, I think we are in multiple offer appraisal gap type situations again. And I think we're looking at a very, one of the top 5 most competitive markets in America across the board. That's crazy.
I remember when graduating from high school, so many people leaving town, and I think it's, especially Marysville, I think Columbus as a whole, I don't think most, and maybe it's just because I'm optimistic about it, but I don't think most people really have a grasp of what it really is, that you can say we don't have mountains or the ocean or whatever, but have you ever heard that Columbus is a good, a popular test market for a lot of companies.
Yeah, I've heard that a little bit, like Battelle and stuff like that. There's like nutrition stuff.
Well, like we had a test Best Buy out here, like it was a Best Buy, a small one. And anyway, that's one thing I'm always fascinated with is historically what happened in places. Excuse me. And now what is the feel and culture of a place? Obviously, certain, but who moved to an area in a migration 100 years ago, or just, the Northeast versus the Northwest versus Florida versus whatever. Anyway, what I've heard about that is just that we were such a crossroads of people traversing the country that a lot of different people stopped here and whatnot. And so I think because of that, we have this great kind of, I don't want to say mediocre, moderated, economy around us that always does pretty well. And I think people they take that for granted. They don't realize how great of a place this Central Ohio area is with all that there is going on and the diversity of industry and all the things going on. It's pretty good. And I think all of those things are only going to they're getting better with all of the things going on. And so that's going to create more going on. Did you see the census data from this last census versus the previous 10 years?
No.
Came out from Columbus Realtors. They shared in a presentation. I'll get the numbers somewhat right. But was it 10 to 20, I think is what it was? Man, is it 2.5 years ago or 2 years ago already? That in that 10-year span, Central Ohio, I believe, grew by 235,000 people. Wow. The rest of the state, the remaining, 11 counties, Central Ohio, so 77, the remaining 77 counties grew by 35,000.
Wow, that's insane.
So in 10 years,
wow,
that much concentration came to Central Ohio. Yeah. And now we have Intel, now we have blah, blah, blah.
Yeah.
So anyway,
I remember reading articles about like the rest of Ohio would have a net population decline if it weren't for Columbus. Like Cleveland and Cincinnati, I think are like not necessarily booming. And I think that that's why Central Ohio is so unique, because like even outside of Ohio itself, it's very different. And you kind of feel in places like Toledo or Akron that you feel how important getting good jobs is to your economy, right? And you feel how, like Akron, they had the Goodyear plant up there, right? And for a long time, they produced tons and tons and tons of Goodyear products there. Right. And as they've scaled that back, you can really feel that ripple throughout that economy. But Central Ohio, again, you go back to it, it's like this almost in Ohio, because Ohio's losing people, losing jobs. Ohio is gaining so much people and so much jobs that it makes up for the rest of the state. It's crazy.
Yeah,
absolutely
it's amazing. So it's a moral of the story, I guess, in 2023. I don't foresee any. I always try to say you never know what's going to happen, but I don't foresee any markers that are going to show that it's a bad time to get into the real estate market or make a move or whatever. Things are only going to get more constrained. There's more pressure. There's more whatever. And so, for me, I'm less of a play the numbers kind of person and more of a, if it's time to do it, generically, is it good or bad? And I think it's always going to be one of my favorite corny sayings. When's the best time to plant a tree? You know this one?
No, when is it?
20 years ago, but that's impossible. So the next best option?
Today.
You never heard that one?
That makes sense.
Good.
I think I've heard it now. Maybe, but
yeah, he's playing along.
I love it. I love it.
But anyway, so I think the point is things that are good long term. Most things that are beneficial in life are good long term things, and housing is definitely one of those. So,
absolutely.
Not that our job is to sell you on a house or a mortgage, but that
it is her job. He's kidding. Buy a home with Derek this year. Buy a home with Aric this year as well.
Oh, that's a nice tagline.
The Aric and Derek team. There you go.
There, I like it. So I guess we are a few minutes over our 30-minute goal.
That's all right.
Yep, good stuff. So thank you for listening to us for the last half an hour. Thank you for coming and hanging out.
Thank you for having me. Absolutely.
Yeah.
It's been an absolute pleasure, and really looking forward to a great year in housing in Central Ohio. And
So what's the best way for people to get in touch with you?
best way, I'll put a link to our website. We've got our contact information all over there, and you guys can give us a call. My calendar's on there if you want to schedule a one-on-one call with me.
Easy peasy.
Otherwise, send us a quick email, but all the information will be in this link.
Sounds good. Well, until next time, make sure you like and subscribe and do all that stuff you're supposed to do if you want to.
Thanks, guys.
Take care.